Hello everybody, here comes the second video. Hopefully this time you're gonna have a better image as I added the HD 1080p. You will let me know if it's any better. So just to go in there and go over the basics that we covered in the first video, let's see if it works. You have the 20 over the 40 and over the 50. This tells you that we are bullish and the market is going up. Up to this point the market was going up. As you see here, if we get rid of the first red bars, you will see that around this time, right, the first bar, candle of indecision, we don't have a signal yet, except for we look down here at the RSI is telling us that we are overbought, and we have been overbought very much since the morning, since the market opened. And as we scroll down one more time, you can see here that you found first a candle of indecision or a doji, and from here you can see that I drew this line right on top of my dotted line or my dash line just to see if it's dying off. And you can see these two pieces, these two dashes are off. They should be on top of the solid line, and they're not. So that's my first signal that this thing is getting weaker. Also, if you draw a line right through here, you will know that this is also getting weaker, and you will realize that we had an uptrending pattern that was heading this way, and all of a sudden it's dying, it's flattening out right here. This is your first signal that things are getting they're about to change direction. And so if this is correct, let's go one more bar, and the next bar would have told you that we are going lower. Now, many people say, yeah, but we're going to bounce from here, except for the fact that now you have a line from here, the blue line, that is nosediving and is wanting to go across the white line. Once it crosses the white line, you're going to get more of a sell-off. And so in this case, you're going to see the drop on the MACDs as well. The bars, the green bars, are decreasing. They are telling you that we're also going down. As we cross right here, this is the third signal that is telling you that we are now for sure going down. And then you're gonna have the 20 being tested, breaks below the 20 and the 40, tries to regain, and it gets rejected at the 40, which is the green dash line. At that point, you know that the change of direction is established. If you enter late, you entered here, you still had some move to the downside. Now, in my view, one of the reasons why we bounced at this area is because we were at the 78.6% Fibonacci, and this has been following Fibonacci very much in the past month or so. It's been right on the money when it comes down to this, and I will teach you later on other videos on how to draw the Fibonacci, but in this case perhaps it overshot it for a second, and you also see the 20 is coming to close to the 40, but in reality it kept us right on top of each other. It really didn't cross. When you see a bigger pullback, you're gonna see them opening up, and instead it started getting on top of each other, which it doesn't help, right? On top of that, we had here the MACD that it was bright green, right? Sorry, bright red, and it started to recover here. So this bar right here told you that is we are beginning recovery, and around this area I think I told one of my members it's likely we go for 411, and so 411 once again, right? Because only why would I guess 411? Simply because we went to touch it earlier, so I would imagine that we are going to revisit that number. So that being said, we were seeing some recovery here on the MACD, and we're also seeing support at the Fibonacci, which it remounted the 200, the 150, and the Fibonacci, pretty strong support, and things started turning around. So here we go back again. 20 and 40 are very close together. This is an area where you're not supposed to enter because it's not clear. Here you're still not supposed to enter because it's not clear. Now if you enter there, you're likely would have closed your position. If you enter calls, if you're bullish on it and it pulls on back like this, you're going to be very disappointed. But if we see that the 20 just came back down and started getting together with the 40 once again. So now this told you to break once again, blue line crossing over the white. This bar right here told you that the momentum is changing. Now the MACDs also told you that the momentum was changing right from this bar. So if you drew a line right from here, you would have also known that this momentum was also changing and is trending down. So at this point, we went, retested the 150. At the 150, you see a strong bounce. At the bounce, you're getting a hammer. It's pretty much a thick portion on the top and you have the wick. That's a hammer. Now, that's telling you that there's a change of direction. Why? Because the bar was completely red, and then all of a sudden this gets picked up from all the way from the bottom, and buyers are buying this in, and it goes and leaves you with this little piece. That tells you that there's buyers coming in. That will confirm by the next bar, which gives you another bar that engulfs the last one and the bar before that. So it goes to retest the 20 and the 40. Now at that time, if you enter here, you're still early. You're still entering, or you're not entering correctly. Yes, you're trying to catch the bottom, and I understand, but you don't have any clear evidence of that the 20 is about to go up and point upwards. So even there, you're still early. You would have been disappointed if you enter right here. You would have been disappointed if you get this big red bar. Now, back to this. Now take a look. 20 starts getting wider from the 40. Today was a very hard day to trade, if you ask me. You can see that the 20s were very close together to the 40, and it was it was a sideways day. When do things start getting better actually? Well, I had said that we're gonna go into this gray area, and we'll zoom out and I'll show you later. But if you paid attention to the MACD right here, right from this point, we went bright red into less red, less red, less red, less red. If you paid attention at the first hint of green, you would enter, which is this right here, to test the markets. You would enter right here, which gives you again a hammer. We talked about it. It's a lot of buying coming in through. So then what you're going to do is you're going to enter this trade, and if you see it get rejected at the 50 and come back down, you will close the trade. In this case, he played out. You see that we continue to now be supported by the 200 moving average, which is this line right here, that red solid line, and we found support there, followed by a hammer, followed by a green bar, and then we got the MACD recovering. So from there, we open up. Now, let's take a look. If you entered right here, when the 20 crosses the 40 and the 50 is crossing, all three are crossing in here, then if you entered on this bar, then you stayed on this trade for the rest of the day, you would have been up about 1.58%, 1.58% or 1.68%, somewhere around there. Now, if we continue going and you stayed on this trade until the end of the day, then you would have been right here, right up there. Now, let's zoom out a little bit. Now, the entry point on this move was right here, somewhere in here, because you see the 20 clearly crosses the 40 and it starts going. Now from here, if you wanted to enter early, you would have entered right here, the cross of the MACD. When it goes to green, you enter some, you put some calls in there. You can step on the gas as we cross the 20 over the 40. So that you would have stayed on this trade until the end of the day. You would have collected whatever it is percentage, whatever money you put in there. Now let's go over some things. Now take a look. At the end of the day, you're getting an inverted hammer on this candle right here, and it's got pretty significant volume. It's got a volume of 3 million. You see it in the corner, 3152329, the volume right here. So you see there's a significant volume. That tells me that there was a lot of bullish momentum at first, but then the bear stepped in and they started selling off on this candle. This is a inverted hammer, or a candle in which there are more sells than buys. Now if we zoom out to the 1 year chart, you can see that we have been talking about this situation. Like, you have this blue line right here with this blue line right here. That is giving me this channel right here, this channel, bottom, top, bottom, top, bottom. We broke below it, so we had to change a little bit, and then we had to build a new channel, which is these two yellow lines, this yellow line and this yellow line, to form this channel, because now it became top, bottom, top, bottom, and we went top and we broke above that channel. That was your first signal that the market is going up. Now I had drawn this this oval right here. I said right around here, I said my target price for the market is going to be somewhere around this oval. Now this gray point, I'm looking at 410 or so. I was looking between 408 and 410, and we finally hit it. Now my other thing is this: if you pay attention to this, the MACDs are getting overextended. Overextended to the point that last time we were up here, we pulled on back. You see 1 and 2 red bars right here. So it's my view that at some point we're getting closer to it. Maybe it's going to take a little bit longer, but you can see here that once we are at those extremes, we pull on back. Here we pull on back. We had 2 days pullback. It's not a meltdown, but I'm looking for a pullback. Okay, we can go a little bit higher, extremes like this right here, but no, pay attention. Every time we reach that level, we go down 1, 2, 3, 4 bars. If you measure that from there to there, you're gonna have a significant drop of 5% or so, 5.50%, 5.5%. Now remove that since I have too many lines, and you're gonna have the Fibonacci right here. We're gonna talk about the Fibonacci in other videos. I know it looks a little bit busy, but it'll all make sense as we start zooming in. So where are we going? Everybody wants to know where this market is going. Now, if you drew a line from, which I already did, it's from the top and it hits this top, and also it intersects right here. So I was looking for this intersection, and there's a few things going on in that intersection. It is possible that we can pull back here. I would assume somewhere around 404 where that white line is. And if we hit that 404, maybe go up and retest this line. If this line gets rejected, we can head down into the Fibonacci, 61.8% Fibonacci, which is around 401.5. At that level, there's also the 50 moving average, which is this blue line right here. So this is the area where everybody's looking at right now, because they're thinking that if there is a pullback and we can hold above the 50, it's time to buy more into the rally, because that will give us some cooling off of the MACD. It will give us some cooling off of the RSI, which is whether or not the market is overbought and oversold. And so we are not at extremes. Extremes are around here at 70. So if the market decides to push on further, we can go to extremes, and extremes lay somewhere around here, the 417, 418. That's the 100% Fibonacci, which gives us the top right here. That will also give a double top. You'll have a top here and a top here, which if at that time we get rejected, we're going to come down pretty hard. Now, if this move wants to go higher, we're going to look at the 3-year chart here. If this move wants to go higher, then we have room to go all the way to this area right here, the 427 area. Why do I think that we can go as high as that? We'll take a look. Extend this to the right. That blue line, this is forming an ascending wedge, and ascending wedges usually break to the downside. So this is up and down, up and down, and then we're missing the up part. The up part is missing from 411 all the way to 427 or 429 or so. If we're gonna follow that channel, we're gonna go all the way to the top. We're gonna have stops in between, of course. We're gonna have some pullbacks in between, but eventually we're gonna reach that line. If we're gonna reach it, right? If we're gonna reach it, then that's what's gonna look like. Now, why do I have this blue line right here? Well, I drew a line from this one touching the top here, touching the top, and now is basically touching exactly that. This is where we're at. We're about to touch it. We're almost there. It sits at actually, I'm sorry, we already touched it. We are right on it at 411.48 or so. We are right on top of it. Now, is it time to pull on back? Can we pull on back from here? If you ask me, and you look at the 3-year, this is still bearish in the sense that the 20 is below the 40 still. So, but again, look at the MACD. We look at the MACD, and it has a lot of room to go. If this thing wanted to keep running, it can keep running. It can continue to go running. Now, you see that red line that I drew right there at the 1-year chart. You're going to be able to see that that line is the bottom of this trend line. I had drawn 2 because we had overtaken it down here, but we found the support at the 38.2% Fibonacci. No coincidence. This thing has been following Fibonacci's. Now, at the 1-year chart, guys, at the 1-year chart, the 20 just crossed the 40. That is bullish. But what I'm expecting is that we pull on back here somewhere around 404, and this to remain crossing for us to get the next push into the upside 415, 416, and go and retest those highs. If we are able to break this tomorrow, we should be able to break this tomorrow. If we break that, we're going to likely start heading a little bit higher. But before we do that, I think that we are going to pull on back. Now, we are at the RSI at the red line, which we are usually pulling back from there. We pull that from there, we pull back from there. Here we pull back before, we pull back before. So we are in an area that is more than likely that we are going to pull back. It's likely that we're going to pull back. Now, I'm not saying we're going to melt down. I don't think that's coming yet. I think we're going to complete this right here eventually. Either we go up here, come back down, and start retesting these lines on the way down again and land somewhere around here. Again, 375 will be the first stop. If we do that, you'll have a wave like this. You'll have a wave up, a wave down, a wave up, complete that, and then come down and do a wave down. That'll complete this. That will complete it. It's funny how markets work, but they like to be symmetric. So if that ends up happening, then we're gonna be seeing that 375. And if at that point things are better and if nothing else is happening, and you know, and things are really turning out, and we are not seeing any type of inflationary environments or anything crazy, then they're gonna start saying that this is the bottom. And it could be it could very well be right if it ends up happening. My view is that we still go lower, but it's not gonna happen all at once. If you look at this whole picture from there to there, we broke out of this channel, and it seems like if we are going to get the lower leg, we would need to complete this first to get underneath this blue line. Once we get underneath this blue line, that will put us underneath the 200 moving average. If we ever close below the 200 moving average, which sits right now at 392 or so, if we break below it and we confirm that by hitting this line and coming back down, we are going to see the new low. But in the meantime, the market remains bullish, and we have to follow what the market is giving us. For now, this is what we have. If you guys have any questions, let me know. We're going to throw one more thing into the mix so you guys can take a look at a few things that I'm looking at. So if you look at Apple, okay, Apple is also reaching my target. I have a yellow line that goes from here all the way down, and you just trace it that way, and I have another yellow line here. Now this looks pretty simple. It looks this way: up, down, touches the yellow line, is coming up, is about to touch the yellow line. We are coming up to the number. Now the question is, well, can we pierce through the yellow line? The answer is yes. But why? Because we are not at extremes. As you guys can see here, we pull back when we hit the red, when the red line starts popping in here. When we touch the yellow line, we tend to pull back. We have pulled back before, as you can see here. We hit this and pull back. We hit this and pull back, but we just passed that. Now, once we pass that, is it likely that we go to extremes on Apple? And yes, it is. And if it is, then that means the market is going higher. Now, how much higher? Up to this, right there, which it will look something very similar to the SPY that is missing this part, that it has not completed it. And it can go and complete it here, get it out of its way, come back down lower, retest this yellow line, get under it, then bounce off of it, come back again, and then start finishing this channel. Once it comes to finish this channel, it's probably going to sit somewhere around where the 200 moving average will be. If we end up coming back lower, 124 or so will be probably the bottom of Apple. And if we ever hit 124, because I don't have a crystal ball, we may not, right? If we ever hit it, then that's likely going to be the bottom of it, and then we're just going to start retracing slowly. It will go slowly, it'll start flattening out, and we'll start moving. Another thing, I know Nvidia, everybody's looking at, and everybody wants to know about Nvidia, but Nvidia is also coming to a resistance right here. Every time we go touch this area, we usually pull back very, very hard. You guys, earnings are coming. Maybe that's what's going to do it. But you see a retracement all the way down to, that was 62% retracement there. And so that came from this area. And at that time, interesting enough, at that time, we were not crazy overbought, as you guys can see here. It was this peak right here. We were not crazy overbought. In this occasion, we are overbought and reaching extremes, which will be at 85. Every time we touch 85, we melt. Look, 85, melt down. 85, melt down. Now, if you think we're going to hit 85 and continue to go to a 90 and 100, I think you're mistaken. But I'm going to play what they give me. I am looking right now at the fact that the 20 is above the 40, and I believe that shorting this or getting into puts on this point, you are making a mistake, because you are jumping into a running train. You don't know when this thing is going to stop, and so why would you? Why wouldn't you want to just wait until this thing actually hits something, hits this, and wicks out and comes back down, for you to actually say, well, now it's pulling on back. Once it pulls back, where can it go? Well, it can go to here first, 242, or the next Fibonacci, 220, which is the 20 moving average, which is the most likely scenario. If this thing is going to continue to run, it has to pull on back here to the 20 and then find its way up. Now, if you ask me, just look at the volume, guys. Look, volume here for this week has been trash. For the whole week has been trash. There's no volume, but yet it continues to push. That is one very interesting thing nobody's taking a look at. Look at the volume for the whole 3 years. This is the lowest volume it's ever been. Okay, and unless this thing picks up for the rest of the week, it ends up being with a low bar like this. This rally is fabricated and it's not going to last very long. When you see a bull market and people buying behind these markets, you see actual volume picking up. This volume is not picking up. Okay, this volume is actually coming down. Now, if you look at the 1 year, and we are reaching that level, that it's a new high, right? So imagine that, how the markets are right now, how everything is now we have OPEC, now we have the Fed. Now we don't know what the Fed is going to do, given the fact that inflation is likely going to continue to be on the rise if gasoline prices end up going higher due to supply and demand. And so now we're in this situation. Now, in your right mind, why would you buy Nvidia at this highs? Why? Tell me. Just a year ago, it was at this. It was lower than this, right? A year ago. So why would you buy into this? It doesn't make any sense to me. I think it's being used to push the markets, and same as Apple. And so if you guys look in here, every time we are in extremes for the year, we are at extremes. Last time we were at extremes, we pulled them back right here. We pulled them back. We ran a little bit higher. We went on extremes. We ran a little bit higher, and then we came back down. So now we have this trend line. This trend line, if we're gonna pull back eventually at some point, that trend line will be revisited. Whether it's like this, hit this again, and come back and revisit this trend line, which sits at exactly 50% Fibonacci, which looks like that is what would make the most sense. It does not make any sense to buy into this right now. There's other things that we can buy. If you really wanted to go buy and you feel bullish, there's other things that you could buy. But in the meantime, I don't see why you would want to be in this. And going over the VIX right here, the VIX is basically, if we go over, let's go zoom out a little bit further. So I put it to max just to see this, right? So if you drew a line from here like that, so we'll look something like that, so you can catch the most bars that you can. It will look maybe a little bit lower. We could catch it will look something like that. And so if you drew this here, a flat line right here, this will be also a descending wedge, in which is making lower highs, lower highs, lower highs, and it's got a flat bottom. So this is going like this, up, down, and it's coming to the end of this triangle. This is coming to the end of the wedge. Usually when things come to the end of the wedge, if you draw a line, a counter trend line from here to there to the upside, and if I extended this line to the right, it will look something like that. If we find some footing in the VIX right here, we're going to eventually see this either bounce around a little bit further, but if it gains strength riding along this yellow line, eventually we can find breaking of this line, which can give us the next pullback in the markets. In the meantime, we are over sold area, oversold territory, not extreme, but as you can see, for the VIX on the max, I went extended it all the way to the max. This is the lowest you'll ever find it. So max forever and ever, years and years, you're looking at that red line. So that's why I drew that red line there, and we are basically right on it. We can go down a little bit further, but once we touch that area, it is likely to find the support maybe at this line right here at 18, where it has been finding support. If you guys can see here, last time we formed this falling wedge, and as we got to the end of the wedge, we found support and we pushed on hard. Now we're redoing that again. We are redoing that again. If you draw a line from here to there, you have another wedge that is forming that eventually, if it finds its way on the yellow line, is going to start heading up this way. If it breaks to the upside, we're going to go retest this line again. Once again, eventually one of these days we'll break above it, and that's when the fun begins. Okay, in the meantime, I don't want to go over too many things at once, but you guys watch it, let me know what you think, and let me know what else you want to cover, and if it is any clear. If you have any questions, feel free to ask. All right, you guys have a good one, and that's the end of the video. Thank you.